What's up, Facebook? Ty Crandall with Credit Suite here, and today we're doing a special shout-out edition for anybody that is in the transportation industry. If you're in the trucking industry, this is going to mean a lot for you because I have had a lot of requests recently to do a webinar, especially for those in the trucking industry, about what's different, the steps to build business credit. A lot of the people that follow us are in many different industries, but one of the industries that we do a lot with is people in the transportation industry, and we do this because so many truck drivers are getting business credit cards to buy fuel, to get auto vehicle repairs, maintenance, even to actually physically buy vehicles. So I've had a lot of requests of why don't you do a Facebook Live for us to talk a little bit more about these steps in building business credit and especially how they relate to the transportation industry. So today we're going to be talking about how truckers can easily build business credit. You can even admire my little chalkboard artist that wrote, "Wash me and Ty was here." I love what she does. So we're going to be diving in, talking about what this is, the score factors, reasons for declines, every aspect of it accounts for about 3/4 of a very big whiteboard. So again, this is really different for me because I don't usually do industry specific Facebook Lives. So I don't expect a ton of people to be pouring in here today, but that's okay. I want to have a video out there for those in the trucking industry because I know you have a lot of questions on how this process works. A lot of this will work for a lot of you. We'll talk a little bit more about the specifics for the industry as well. So first of all, why get business credit? Well, again, one of the main reasons is you're basically separating your business from your personal. One of the things I think that a lot of people don't know about business credit is that business credit can really be designed for a business to fund itself. So you don't need to personally fund it. So one of the nice things about business credit is that you're separating your business liability and your business credit report from your consumer report. So what happens is you're building your credit report for this guy, for your business, then it can stand on its own so it doesn't need you as much personally. Now, another big reason is you're not responsible for business debt. So somebody asked me this the other day in one of our groups. They said, look, why is a guarantee so important? If you don't plan on failing, if you don't plan on defaulting, why does it matter? Well, the answer is simple. Why would you personally jeopardize all of your personal assets if you don't have to? That doesn't make any sense. I, for one, was in the mortgage industry when the whole thing crashed, lost everything personally because I guarantee things for the business. None of us expect to fail, but all kinds of crazy, unexpected things happen, whether it's failure or you just go late on a payment. The probability of you being personally liable for things doesn't make sense if you don't have to. So business credit, we're separating that liability. Now, another reason is you're getting fleet credit, gas credit cards. These can help dramatically. So look, if transportation industry, the reality is it could cost you $600 to $1,000, as you know, just to fill the gas tank. And when you're using your own credit cards to do that, especially if you have credit issues, your limits are lower to begin with. So you may get 2 tanks of gas with the total limit of what you have for a credit card. But business credit, one of the big primary components, as a matter of fact, we have a whole tier of credit just called the fleet credit tier, which is used to get these fuel cards, to get credit cards for the purpose of repairs, of maintenance. And if you've ever watched the show Ice Road Truckers, even if you're not in the trucking industry, you get a feel for how much maintenance actually needs to be done on big rig trucks. So again, it's a really big deal because fleet credit can ease a lot of your cash flow constraints because you're able to get these kind of gas cards, you're able to get repairs, you're able to get maintenance. Now, often there's no personal credit check. We're going to talk about how to do this correctly today. There is a change in 2018 where they're going to ask for your social security number now. I'm going to show you how to do that still without the credit check. Personal credit doesn't matter. So no matter how good or bad your personal credit is, it doesn't matter. You can still get approved for $10, $20, $30, $50,000 limit accounts regardless of this. The other nice thing is that there's no inquiries on your credit report, so you don't ruin your ability to use those inquiries for other kind of personal funding. It 2X's your borrowing power because you have consumer credit and business credit. It's the only legal way you can have 2 different kind of credit profiles, and it's much faster to build than personal credit. As a matter of fact, I'm going to show you today how to get your first vendor accounts right away, and then you can get to the end, cash credit, auto vehicle financing within 6 months. In the consumer credit world, with personal credit, it takes you 6 months to even get a score. In the business world, you're basically getting it done in 6 months all the way to the end. Okay, and the credit limits are 10 to 100 times of that of consumer credit. So you have to think of it like that. Consumer credit was never designed to fund a business, and business owners spend a lot more money on business credit cards than they do consumer credit cards. We may spend a lot, I don't know, $200,000 on our Amex card a month that we use and pay off. So again, we have an appetite for a lot more money than we'd ever need in the personal side, which is why these limits are so much higher. So when we look at score factors, business credit scores are primarily based on payment history. So let's look at personal credit. Personal credit actually has 5 different components here. Payment history is 35% of your overall score. Utilization, 1% of your high credit limit is 30%. The credit mix you have is 10%. How long you've had credit is 15%. And the accumulation of new credit is 10%. Here's why this matters. When you try to fix one component of FICO, you hurt another. So let's say you don't have enough accounts to have enough payment history. Well, then you get more accounts and you hurt this aspect, which has to do with getting new credit. Let's say that you go ahead and use credit cards to build the payment history. Well, then you're putting balances on there and you affect your utilization as well. Okay, let's say you try to have the good credit mix, not too many revolving accounts. You try to close out some older credit cards, then you adversely affect this. So because it's this convoluted mess of these factors, we're trying to improve one hurts another, it's very difficult to get really good scores. It takes usually people into their 40s or so to get to 800 credit scores. But in the business credit scoring world, as we could take a look here, it's basically based on payment history. So Dmv scores are strictly based on how you pay. If you pay it early, your score is 100. If you pay within the discount period, a 90. 80 means you pay as agreed. If you had a 20 score, you pay 120 days beyond terms. It's basically determined based on how you pay. Now, Experian's a little bit different. The credit score kind of works like FICO, a little bit of a percentage for everything. But if you add up these, 85% of this score still has to do primarily with payment history. Equifax is all payment history as well. The score literally depicts on how you pay. Guys, I can't tell you enough. This is why business credit building is so fast and so easy, because scores are just based on how you have to pay. So our goal, you and I, is to just get scored, to get accounts that report to Dmv, Equifax, Experian. If we get accounts that report to the reporting agencies and you pay the bill on time, you get a good score. Then the score is what drives future approvals. So the goal is to get accounts that report. The more of those you add, the better. And then the other nice thing about this is that you're then able to come in and get a good score by just paying those bills as agreed. So very different than what we're seeing here with personal credit scores. So with business credit, no business credit oftentimes will mean a financing decline. So there are some out there that are notorious for just turning down people, like on deck. They just turned out a lot of people. And one of the reasons they turn down a lot of people is because of business credit. We have a stack of approvals from them or denials from them that cite the main reason for denial is business credit. Now, business credit is not like consumer credit. There's no business Fair Credit Reporting Act, so they don't need to tell you why they're declined, but we see a lot of denials for the reason being that there is no established business credit. Now, this isn't surprising, right? I mean, if you think about it, when you go to get any kind of personal loan or credit card, they're obviously going to look at your personal credit and use it as a factor of approval. In the business world, like, why would they not do the same thing? You have business credit reports. You have business credit scores. It shows your financial data. It shows your risk. Of course, they're pulling this data. So even though there is no Fair Credit Reporting Act, even though they don't have to tell you that they're pulling the credit, they don't have to tell you the reason for the denial. Business credit is often an underlying reason. So also the business starts with no credit profile. You don't have a credit profile in the beginning, but you can be given a credit profile with Experian and Equifax even if you have no credit. And this is really a devastating things that we see with business owners, because Experian and Equifax say, look, if you're in business and you don't have credit, you are high risk. That's the way that it is. You're of substantial high risk. So the reason, I'm going to try to pull up some of these reports just to show you this. So the reason that this is such a big deal is that even not having credit at all can in itself mean that you get bad scores. And if you have even one account reporting, it can fix that. And here I'm going to show you this on real credit reports right now that I use as kind of examples of this. So if we look at some Experian credit reports here is an example of somebody that has a bad score. This is this score, where's the risks financial? This score literally depicts the risk of going bankrupt. This is the good score. This is bad. You can see about as high as they can go. You see lack of trades is the number one reason why. You can see that they have no credit. There's just nothing here on the report. Now, if we look at somebody with one score, look at how they went from a 28 to a 96. They're still not completely the lowest risk of bankruptcy, but they went from all the way here to middle risk, and it's all because they just added one account here, packaging, which is probably Uline. So this is different in the business world. In the consumer world, you won't be given a failing score just because you don't have credit. In the business world, you will absolutely 100% be given a failing score with Equifax and Experian just because you have no credit established. So you need to make sure that you don't get declined by financing because of that. Okay, so you want to get credit. You want to use the credit. You want to pay it timely, and then that gives you that positive credit profile. Then you can use the credit, continue to pay bills timely to get more credit. So what happens here is the credit profile is established by getting accounts that report to the reporting agencies, then paying them as agreed. Remember, your payments are based, or your scores are based on how you pay. So you can't get scores if there's no payments. So you have to get credit and use the credit. It's the using of the credit that will give you the score. And the more of these accounts you get, then what happens is the more tiers of credit become available. So for example, as you'll learn, you can get to retail credit when you have 5 accounts reporting or more. You can get to fleet credit as a trucker when you have 8 to 10 accounts reporting or more. So it's about getting more credit, using the credit. I kind of break it down like this. So the very first thing you've got to do is get credit that reports. That counts as trade lines, which gives you a credit profile. Now, having a credit profile will help you get approved for financing. Paying the bills on time will give you the good score. The good score is what will determine the rates that you'll pay, the interest rates you'll pay. It's the same as consumer credit, right? If you have a good credit score, you get a better rate. If you have a bad credit score, you get a worse rate. Same thing in the business world. The score determines the rate. Having the profile and the depth of the profile, how many accounts you have reporting, determines if you'll get approved and how much financing you may actually get. Okay, so building business fundability, right? Very important. The goal here isn't just to build business credit, it's to make you more fundable. It's to help you get financing. We know lenders are using business credit reports to prevent declines. How do we do the opposite? How do we get an approval and actually make us more fundable because we have them? Well, again, there's a lot of credibility points we've talked about here. You want to make sure you have the exact legal business name anywhere it's recorded, including your DBA, okay? You want to make sure that it's the same on your corporation papers, all listings online, your licenses, your bank statements, everywhere it's listed. Today I had one of the financial gurus with Yext on our podcast, and this is what Yext does. Yext is one place you put your information, and then it puts it congruently everywhere. Whether you use a service like Yext or anybody else, you want to make sure that you're doing those things. You also want to make sure that you set up an entity. Get a corporation set up. You can do an LLC even though it's not officially an entity type, but use a corporation or an LLC. Stay away from sole proprietors. Stay away from partnerships. Okay, you want to use your EIN to open your actual account and build your business credit profile. So you need to make sure that that's verified on all of your listings. Your EIN is important. Look, your EIN is so important. We give everybody a DUNS card here at Credit Suite as our clients because it's so important. As a matter of fact, here's mine. Boom. It gives me my EIN and my DUNS number. I don't care if you have this because it's publicly accessible information. So I keep this literally right on my desk right here because that EIN is so important. So we actually give our clients these actual cards that show the EIN and show the DUNS so people can actually use them and make sure that they're entering the right info on at the right time. That's important because I've done that once. I've entered the EIN in the wrong EIN for the wrong business, an EIN for another business I own, and the wrong place on one document. Then I kept going back to that document every time I needed the EIN for the business, and it was a mess. I had to go back and correct the EIN in a lot of places. So it does happen, especially if you have multiple businesses. So make sure you get that EIN and make sure you verify all the listings the same. Also, get the basics set up too. Brick and mortar address, a real physical address, okay? So you can use a home address, but if you use a home address, some sources like Walmart won't approve you. The other problem is Dun & Bradstreet now shows Google Street Views of your house on your business credit report. And the reality is you need to know about this because if you're in the trucking industry, you probably don't have a physical location unless you're pretty big. And if you're pretty big, you're probably not on the road driving anymore. So you're probably using a home address. So in that case, consider a virtual address. creditsuite.com/virtual is our source. It's called Alliance Virtual Offices. Alliance is the best one that we've ever seen. We've used Regis and Alliance and all these other ones. Alliance is a great job where you can rent a business address to get mail there without renting a physical location. It's a great alternative. Whatever you do, stay away from P.O. boxes and UPS addresses. But remember, this is all about improving fundability. If you want to be more fundable, then use a virtual address versus a home address. It's not an absolutely no-go to use a home address. Just know some sources won't approve you, like Walmart, and you're also going to have that Google Street View on your credit report. Also, you must stay away from those UPS and PO boxes. Those are no-goes, okay? Some lenders aren't going to approve you unless you meet this criteria. This is why a virtual address is just an absolute great. Look, virtual addresses are brilliant for a lot of different reasons. One of the reasons is because you change addresses, okay? We're having that. So we got this address. We're here for 3 years. Now we got to move because we need something bigger. So now everywhere we have to change our address. It's a flipping nightmare, okay? So having a virtual address, no matter how many businesses you have, no matter when you change addresses, you always have one set address you use for mailing purposes. It just makes it easier for you, especially as your business grows and changes locations, because we dread when we move into a new address and have to change all that information. Other requirements, make sure you get a business phone toll-free number, get it 411. You can get voice over IP numbers. Don't use Google Voice. Don't know why, but Google Voice for some reason is a little bit sketchy with this. Okay, get a toll-free number and get it listed with 411. You can go to List Yourself to do this. Stay away from cell phones. Stay away from home phones. They know what these are. And again, if you're in the trucking industry, then you're operating from your cell, but you still need a toll-free business number you could forward to your cell on applications and such like that. You can always forward that virtual number to your cell. Get a fax number set up. Set up your website. Set up a professional email address, not a Google, not a Gmail, not a Yahoo email address. Look, it's not only just for lending purposes, but it's for credibility reasons. I can tell you that we had an SEO proposal that we turned down. A guy that came to me from pretty credible sources. We didn't do business with him, and one of the reasons we didn't was because he was using a Gmail address. It didn't look trustworthy to me. And we looked at a couple other things. There were a couple other red flags, links broken on his website. He's an SEO guy. But that Gmail address is what created the concern where we dove deeper. So it's not just lenders and credit issuers. It's not just your fundability. It really comes down to just overall credibility and reputation. Don't use unprofessional email addresses like Gmail. Get a professional email address for your business, like yourname@yourcompany.com. Stay away from those free email services. Now, also, don't forget to set up your bank account, okay? It becomes very important. As a matter of fact, the date account opened sometimes count as the date your business starts. So a lot of people think they're going to buy shelf corporations. The problem is that your D&B credit profile has an Experian Equifax as well, have your family tree, your history, and they also have to do with anybody you're associated with, ownership changes. So if somebody bought your business, or if you bought a shelf corporation, that ownership changes on the actual credit report. And what happens is that triggers a red flag where lenders immediately then start going off your bank account start date instead of the date that the entity was founded. So you need to know this, because if you ever have an ownership change, in a lot of cases, banks will look at the bank account start date as the date the business started, or even worse, they look at the date the ownership changed as the start date, and some lenders do that just because so many people are trying to use these bogus shelf corporations. So longer history is better. So you want to get that business bank account opened. It's also going to be used as a reference. A lot of business credit vendors are going to ask for business bank references. So you wouldn't have that unless you have a business bank account. So the longer the history, the better as well. And you want to try to keep a $10,000 balance in your bank account if you're ever going to apply for an SBA loan. There's 3 types of credit you should know about. We talked about business credit scores. We talked about consumer credit. We didn't talk about bank credit. Bank credit is an internal secret credit score used by the banking system that basically bases it off of your 90-day average or bank account balance over the last 90 days. In order for you to have a score high enough to be lendable for a bank loan, you need to have $10,000 on average in your business bank account. If you don't have that, don't worry. That just means you can't go into like Wells Fargo and Chase and get approved. The big banks are the only ones that care about that bank credit score. And that bank credit score, in order for you to have what's called a low 5 rating, the lowest rating to get approved for financing. The people are typing in comments. I'm not getting them for some reason, so just know that I'm not ignoring you. So the bank credit score is very important because it's just basically basing your bank stability or the stability of your business based on how you manage your bank account. And again, it doesn't really matter unless you get a big bank loan, but you need to know that it does exist. If you're ever going to get an SBA loan, make sure you have at least $10,000 on average in your bank account over a 90-day period. That will give you that low 5 rating that you're going to need in order to come in and get a big bank loan. Not a big deal for business credit. We don't care. What we do care about is that you have a bank account open, because as you're building business credit, they'll ask you for bank references, not bank statements. State licensing, any licenses that you need at all, okay, commercial driver's license, for example, as a truck driver, any license that you need, city, county, state, you need to make sure that you get. Now, you also want to make sure that with your biz and IRS filings, you've got to be listed the right way, right? So you got to make sure that all that information is congruent with the Secretary of State, with Dun & Bradstreet, everywhere. Next, we're going to go ahead and get your DUNS number. So this is, you're going to get a DUNS number from Dun & Bradstreet. Experian calls this a BIN number, a business identification number. Okay, now you can go to creditsuite.com/DUNS to get a quick link to get that. So, and you're also going to want to get low-cost monitoring as well. I'm going to talk about a couple things here. Let's talk about DUNS to begin with, their DUNS number. So your DUNS number is a 9-digit number Dun & Bradstreet uses to identify your business. Everybody has it. Experian calls theirs the business identification number or your BIN number, okay? So the DUNS number is used worldwide to identify your business versus your EIN that's just used in the United States. Here's a tip on the DUNS. Use the DUNS when you apply for credit, even if credit issuers don't ask for it. We've seen cases before, many cases, where people get denied, supply their DUNS, and then are able to get approved. So again, getting the DUNS number is very important. It's free. The Dun & Bradstreet will email you and call you and try to sell you something called Credit Builder. You do not need Credit Builder, no matter what they tell you. They're very good salespeople. If you don't want to be sold by very good salespeople stuff you don't need, don't ever get on the phone with them. Dun & Bradstreet will never call you just to have a conversation. They're only ever going to call you because a division of their company that sells a product is calling you to sell that product. If you don't want to be sold, ignore their email and phone requests to talk to you, and no matter how urgent, important they say it has nothing to do with anything other than trying to sell you something you do not need to buy. You will get your Dun & Bradstreet Paydex score activated when you have 3 accounts reporting to Dun & Bradstreet and your DUNS number. If you get your free DUNS number at creditsuite.com/DUNS, or go Google DUNS number if you want to do it that way, and you have 3 accounts reporting to them, that will activate your credit profile. You never need to pay them a dime to do it. Next, you're going to need credit monitoring. Maybe not right now, but soon after you start to add vendor credit. You can go to creditsuite.com/monitoring, and for a limited time that's there, you're going to have an option of now getting our advanced credit monitoring as well. So you can get DMV and Experian credit reports for only $24, which is $180 cheaper a month than getting it from them. We now give you an option of adding accounts you already have to your Experian and Credit Safe credit reports, including utilities and cell phone payments. This has never existed in the past ever. Like even DMV that lets you add some accounts to their credit reports will not let you add utilities. It's the first time ever that this taken place. We've got a beta test going right now for that, and then we're going to shut that down. But the beta allows you to get Experian, DMV, and Credit Safe credit reports and add unlimited accounts to your Experian and Credit Safe reports, including utilities and cell phone, for $99 a month. DMV charges $150 a month for monitoring alone. So again, it's like 50% cheaper than getting monitoring with Experian and DMV, and you get the added benefit of adding accounts you already have to your report. Now that might not be there when you see this because it's a beta test, so we're about to shut that down, and then we monitor results, and then we open it up like 6 months later. But that is a possibility at this point. So get that done, get that monitoring set up. Now, let's start adding some accounts to the business credit report. So there's 4 ways to do this that we're going to talk about. Okay, the first way is using what are called vendor accounts. So these are credit issuers that offer terms like net 30, net 60, which would give you 30 days to pay it off in its entirety. Okay, you've got to have that EIN, the 411 listing, all the stuff we talked about. Some vendors are Quill, Granger, Uline, Strategic Work Solutions is another. So let's talk about this. There's 4 ways to build business credit initially I'm going to teach you. The first is called vendor credit. Uline, Quill, Granger, Gimpler, Strategic Network Solutions. You go get credit with them. You then use the credit, you pay the bill after they ship the item. Very important, after they've shipped the item or it won't count as credit. Then those report to the business credit reporting agencies. Voila, you have trade lines. Option 2, it's called unsecured business financing. To get it, you go to creditsuite.com/funding. This is where you use good personal credit and you don't mind using guarantor or using a personal guarantee of yourself or a guarantor, either or, and then you get actual physical cash credit cards, Visa cards, MasterCard, Amex credit cards. These report to the business credit reporting agencies. The nice thing is that you're getting, well, let me change the word. You're getting 0% rates. They're getting about 5 to 8 actual credit lines. They report to the business reporting agencies. You can get it as a startup, and you can get up to 150 grand in financing. So what happens program is you're getting 5 or more credit lines that report to the reporting agencies. So instead of using vendor accounts to get your initial account, you're using good credit and a guarantor to get physical cash credit. You can take the cash out on these or credit lines at 0% and build your business credit that way. Good way to go. So the third option is what I just told you about, Dmvs Credit Builder. Dmvs Credit Builder, I didn't mention this, will let you add accounts you already have to your DMV credit profile and score. The problem is you have to be careful what you can add. They won't add bank credit, leases, rent. They won't add cell phone. They won't add utility payments. None of that stuff can be added. But if you do have software payments, stuff like that, DMV will let you add that. The fourth way, the newest way, is what I just mentioned. It's at creditsuite.com/monitoring. This allows you to take accounts you already have, including utilities, including water, gas, electric, cell phone, internet, all those things, and add them to, even cell phone, I think I mentioned that, to your Experian and Credit Safe business credit reports. So this is a newer, faster way to add accounts you already have. If you combine that with vendor credit, it works really well. So one of 4 ways you want to build initial business credit. And once you've done so, then you can start to move on to the next credit tier. Now keep in mind, your social security number and date of birth are going to be used now for verification purposes only. Here I'm going to show you exactly what this looks like. First time ever I've actually shown this before, but you can see what this looks like. Okay, so here's how this actually goes down. So as of 2018, it's now changed where the government required that they get information for identity purposes only. So if you see, here's an application for WEX Fleet Card, and you can see what it's about. Certificate of Beneficial Ownership, okay? All banks verify the ownership, and then you can see here that they're basically asking you to provide the social, and they're telling you that they're only using it for validation purposes only. This is what you're looking for. Never supply the social without seeing a written disclosure like this stating it's only for validation only. If you don't see that disclosure, you need to be on the phone and let them know you do not and will not give the social unless they are using it for verification purposes only. You do not want them to use that to pull your actual credit. Okay, so very, very, very important. The EIN is what's used for the credit check. Then they pull that credit profile and score. They see these vendors that we added or however we started building business credit. Then we can move on to the next tier. Okay, you may need to prepay some orders initially. If you've missed some ability steps we talked about, if you didn't do these things right, then they may make you place a few orders before you can actually then get credit issued to you. So if they tell you, hey, we can't issue you credit this time, no worries, pay for the items that you were going to get, and then go ahead and order again, apply for credit. By the 3rd time, you'll get it. Uline and Quill are notorious for these things. Now, the first account reports to DMV after it will activate your credit profile. Remember, the first account to Experian and Equifax will automatically make that public profile public. The first account to DMV won't. It takes, remember, 3 accounts reporting to DMV for that profile to actually be public. Remember, if you got vendor accounts, you have to pay them in full and on time every time. Remember, net 30 means you'd have 30 days to pay those off. And some accounts may take 3 reporting cycles, maybe take 3 months to actually report. So you want to get at least 5 accounts to move on to the next tier. My advice is get 5 or more accounts, and here's why. Again, since some accounts only report every 3 months, you don't want to get 5, need 5, and then find yourself waiting 90 days to get to the next credit tier. If you get 8 accounts, you have the best chance of coming in and having at least 5 of those report within 30 days. And then that gives you the ability to come in and be able to build business credit a little bit faster. Now, after you've done this, you move to what we call the retail credit tier. This takes about 5 trade lines to do. Usually you can get here in about 60 to 90 days of total time. Okay, and with this, then the next tier, which we're not even going to talk about this one, I'll jump to that a little bit later. So again, what you're going to do here in a retail credit tier is this is where you're getting Amazon. This is where you're getting Best Buy. This is where you're getting store credit cards, okay? This is when you're getting credit with many retailers. Here's some actual approvals. So we look at Apple here. We're looking at Costco. We're looking at Best Buy. We're looking at supplies. We're looking at electronics and trucking. You're getting laptops and all that kind of stuff. You're using that kind of store credit. Then with about 8 accounts reporting or more, you can get to fleet credit tier. It takes about 10 to get to the next tier, but you can probably get here with 8. We recommend 10. You're going to need about a 75 paydex score. That just means you pay your bills as agreed. You're going to have, this is where you're able to get fuel, repair, maintenance. This is where you're getting BP, Conoco. So Shell, for example, they report to DMV and Experian. You'd have to have a paydex score of 78. You'd have to have 411 business listing. You'd have to have 8 accounts reporting. So that gives you an example, right? You'd have to pay your payments as agreed, okay? You'd have to have that number listed in 411. You'd have to have 8 accounts reporting. If you did that, you could get Shell. So here's some other ones we look at. Here's Chevron. Chevron is a fleet credit card right here. We see Shell. We see Fuelman Fleet. We see Exxon. We see RGS Fleet. We see WEX Fleet. So there's a lot of fleet credit that and fleet credit for the trucking industry is very important. This is where you get fuel cards, the Shell, the Conoco, the Wawa, to get gas wherever you are. Okay, this is also where you get the cards to use for repair, for maintenance, for trucks, or for wheels, for all the tires, all the other stuff that you may need. When you're in the trucking industry, I think that this is the most important tier, and you can get here with at least 8 accounts reporting. Now, when you have the 10 to 15 accounts, and I think I'm going upwards, not down, which is part of the reason why this is a little backwards, that's when you get the 10 to 15 accounts reporting, okay, to get to this cash credit tier. And this is where you're going to keep building business credit, keep applying. Your limits are getting higher, okay? This is when you're able to start getting more of the Visa card, the MasterCard, the Express cards without the personal guarantee, without the personal credit check as well. Okay, so it becomes very important in that cash credit tier. So if we look at this overview, it really goes down to this. We set up the business credibly. We then come in next and we start getting initial business credit. Remember, we talked about 4 ways to do that. Vendor credit. You can also use a personal guarantee or your own personal credit to get cash credit cards. You can get that at creditsuite.com/get funding. And that has to do with getting Visa cards, MasterCards that report to the business credit reporting agencies to build business credit. Only works if you have good credit. You can also use DMV's credit builder to add some accounts there, but it's really pretty tough. You can go to creditsuite.com/monitoring and you can add accounts now to Experian and to CreditSafe business credit reports, including utilities, including cell phone. So once you get that 5 accounts or more reporting, then you move to retail credit. That's Best Buy, that's Staples, that's Office Depot. If you're in the trucking industry, this is where you may get computers and some office stuff, but not a lot of retail credit you're going to use for on-the-road stuff. With about 8 accounts reporting, you can get to the Shell, the Conoco, the Sunoco. People in the trucking industry, this is very important to get to that fleet credit tier. And then with about 10, preferably 14 accounts or more, you can get to the Visa card, the MasterCard, the Amex card without the personal guarantee, without the personal credit check. Remember, pay those bills on time or early. It becomes really important. Remember, those scores are based on you paying on time or early, so it really makes a big difference. that really gives you a good overview. We talked about why business credit matters. We talked about the factors affecting your score. We talked about all the aspects of fundability on why business loans typically get denied. We talked about the exact steps to come in and build business credit, setting up that business fundable, where you're fundable. Okay, coming in and getting that first vendor credit tier. We talked about 4 different ways to build initial business credit. We've also came in and talked about the retail credit tier as well and how to get this credit without the personal guarantee and credit check, even though they may ask for Social Security and date of birth for information purposes only. We talked about this oh so important fleet credit tier, okay? This is where you're able to come in and get 5 to 8 trade lines on your, or this is when you have about 8 trade lines on your business credit report. This is where you get Shell and Conoco and all of these. Then you move to the Visa cards, the MasterCards, all of those type of things as well. Now also keep in mind, there's a lot of other kind of financing that may work. We talked about unsecured business financing you can get with a 680 FICO score. Okay, there's also funding you can get here with about 10 to 50 grand in about 4 weeks through what's actually called term loans. You can get cash flow financing based just on the cash flow of your business as well. You can even get SBA loans of about 8% or so if you have cash flow credit and collateral. There's a lot of different ways you can get money that we haven't talked about today for the trucking industry. But again, the purpose of this was just to teach you to build business credit. Nothing else having to do with funding. But there's a lot of different kinds of funding, even equipment financing you can use to purchase trucks. Does all this make sense? Did you miss part of this? Well, you can go to facebook.com/credit suite to access this playback in its entirety. You can also go to creditsuite.com/Facebook and actually just type in the letters EIN into Messenger. So go to our Facebook page, type in EIN into Messenger. And when you type EIN into Messenger, you then get notified every time we go live. We don't spam you with a bunch of crap on Messenger. We just notify you when we go live. And to give you an idea of what's to come, we're going to be talking about conquering your bank rating, that secret bank credit score. We're going to decode all of that. We're going to be talking about 13 amazing funding options that work really well for women. And we're also going to talk about the reasons people are failing to build business credit and exactly what you can do to that. Those are the next 3 weeks, what we're going to be diving into and talking about. So go to facebook.com/credit suite, type in EIN into Messenger, grab our free guide on building business credit, and we'll notify you when we go live. If you've had questions and comments, my bad. I've done everything I can to see them here, but for some reason I'm not able to see them. So I will try to go back in the playback and make sure that those are answered. But thanks for tuning in. I will see you next Wednesday at 4 o'clock Eastern here on Facebook. Thanks, everybody. Have a great day.